Hey guys, welcome back to the channel. In today's video, I'm going to be discussing why I believe that Coinbase is positioned to do very well in the long term and why it may be incredibly undervalued here at $65. So if you've been following my channel for any number of months now, you know I've been very bullish on Bitcoin and Ethereum. And in general, I do think that the crypto asset class has formed a major cycle low, a major bottom, and that it will generally start to trend up into the next year or so. And obviously Coinbase is highly correlated to the entire crypto asset class. In fact, this weekly chart does resemble a lot of the other altcoins and has a very similar structure as the overall crypto market, which in general is showing a lot of bottoming signs. And for that reason, the fact that we could be having a new bull run start to begin, that it would be very bullish for the exchanges, because when the bull run really starts to kick up, those exchanges gain a lot more users, a lot more interest, especially from retail. And in general, we see their revenues start to increase with the market, which does make sense. And that is why Coinbase is highly correlated. It is within the general crypto ecosystem. And I think Coinbase especially is positioned to do well because what's happened over the last several months is the competition, especially within the United States, has definitely diminished. And what I mean by that is we have seen other exchanges really lose a lot of market share. For example, FTX blowing up. A lot of the participants in the United States used FTX.us. And so all of those users now have no exchange to look to. So Coinbase obviously gains that market share. And another example being Gemini. They haven't blown up necessarily or completely lost user trust, but their earn program did take a hit, with Genesis, of course, blowing up, and that has obviously damaged their reputation. And all of this is to say that there really isn't much competition within the United States. You can look to something like Kraken, which is obviously very good, but those have their flaws. They haven't really gained too much traction. And one of the big problems with exchanges like Kraken is that they tend to have very low levels of liquidity, which makes it very difficult for them to gain a lot of adoption in a bull run. And just as an example to really show you what I mean by that is back here in the bull run, if you recall, Kraken actually had a very massive wick down here on Ethereum when it was basically in this very raging bull trend. And it basically from this wick dropped by about 63%, low levels of liquidity, very inefficient for traders, very inefficient for people who had a stop loss. And this is actually something pretty common within a lot of coins during the bull run. So that liquidity issue is definitely a problem. And I think that is going to be one of the things really holding it back from gaining a lot of that market share within the United States. And I think Coinbase really doesn't have that problem. It has great liquidity and it has overall a lot of volume, especially when we saw during that bull run. So for those reasons, it is one of the best crypto exchanges in the United States. That's not to say it is perfect, and that's not to say it is the best solution, but at its current state, I think it is one of them that is positioned to do very well if we do get a future bull run where we start to see a lot of users come back, a lot of retail interest really starting to come back into the system. And when that happens, that will most likely flow into Coinbase. So of course that would benefit their revenue and therefore the stock. Now, beyond that, we're also seeing a lot of other interesting things happening with Coinbase. A lot of people like to point to their NFT marketplace, which was a pretty big failure, but they're still pushing adoption. They're still pushing innovation. For example, with their most recent layer 2 scaling solution Base, which is working in collaboration with Optimism. So I think that's a very interesting project that they have going on. And overall, it does seem that they are trying to have a better and better product. So those are the reasons that I am fundamentally bullish. From a charting and technical analysis perspective, it really does look very similar to many other altcoins, even Bitcoin, where it's got this very established range where it had the massive capitulation right here in May of 2022, same thing that the rest of the market had. And then it formed a deeper low right here in December, and since then has reclaimed the range, broken back above that level, and is now right around the middle of the range. So we really can't take away too much here on the longer term technical analysis perspective because it is still within the range after a pretty massive fake out to the downside. So what we could look out to in the next few months for potentially a longer term signal is if we can have a breakout either above the range or below the range. Below the range, it starts to look very bearish because that would look like a continuation of the downtrend. Not my primary view. Again, I am very bullish on Coinbase. So what I'm going to be watching out for is a breakout to the upside above the range, with the range highs being right around $96, $97. that was basically this candle, the open on this massive capitulation in May. So you can see that being a key level just before that low right here around $40. And then that was also resistance when we had this leg up in August, coming back up to that level, rejecting, and since then we haven't really retested. So if we can reclaim the middle of the range and hold it as support in the next few weeks, that could be a target to look to, and then we'll just have to wait and see if that level can be reclaimed. Play it level by level here, but the longer term situation for me is if we can have that breakout above the range, then I really start to target some of these upside levels towards the beginning of 2022, such as this level right around $162. That was a support that held on a few attempts just before the breakdown, and then beyond that, we would obviously look to this floor of support right around 208. Back when Coinbase went public, this was sort of the region it bounced off support. You can see multiple attempts just coming back down to this level, more or less a triple bottom, and then eventually when that broke, it flipped into resistance, and then from there, it really just started to kick off that bearish trend, which is now starting to look threatened. The bearish trend has definitely looked like it ended with the 20-week moving average starting to go sideways. It looks like this is just some consolidation, potentially some longer term accumulation. And at this point, again, I am going to be focused on higher prices into the next several months or into the next year or so, but only when we can see a breakout above the range, again, around $96, $97. And what's interesting about this range is that it was very quick for Coinbase when it broke down below the support to go back down and form this deeper low, form this massive range. And if I take a measure move here, you can see from when it broke support at $162, it was only a matter of 5 weeks to drop 40% into this massive range. And what that tells me is that if we can get a breakout, there's a lot of inefficiency here. There's not a lot of price action spent between $96 and $162. And for that reason, there's not a lot of resistance in here. So if we do have a breakout, I think we could very quickly see that move up to that upside target at $162 because of how inefficient this was, how fast-paced this move was, and I think it could be equally fast-paced on the upside, once again, only if we can have the breakout to the upside. Now, all of this is just the bullish thesis, and it obviously gets invalidated if we lose the range. So for example, if we do have a move coming back down, losing this is where all of that gets invalidated. This is where I'm no longer bullish. And if we lose the range, then I start to look for the all-time lows at $31 and potentially look to sort of exit that thesis. I hope you guys did enjoy the content and the analysis. And as always, I'll see you in the next one.